Here we are in the middle of continuing amendments on the Wall Street Reform Bill, and I want to thank my colleagues, Senator Brown and Senator Sanders, for coming up to talk a little bit about an amendment that they have co-sponsored that would honor states' own historic rights to protect their own citizens from exorbitant interest rates charged by out-of-state lenders. I'll just say a few quick words of history. If you go back, from the Code of Hammurabi through Roman law to the founding of this country and forward for more than 2 centuries, the theory that you had the right to protect people from usurious interest rates was clearly established. It was part of our history. It was part of the Federalist doctrine that the founders established in this country. And then a decision came in 1978 in a Supreme Court case called Marquette National Bank of Minneapolis versus First of Omaha Service Corp. And in that decision, it was a technical decision, little noticed at the time. The court said, wait a minute, when you've got a transaction between a bank in one state and a consumer in another, the consumers were in Minnesota in this case, it's governed where? And they said it's governed by the state where the bank is located. Well, the banks thought about that for a while, and their clever lawyers figured out that this opened up a big loophole for them. They could move to states that had the worst consumer protection laws in the country, and from those outposts, market into and against the laws of other states, and they were protected by the Supreme Court decision. Nothing that Congress ever debated or decided, a pure loophole taken advantage of by wily lawyers for big Wall Street banks. This is a really good time to shut that loophole down. We are dealing with a great number of things in this bill that are preventative and esoteric. Glass-Steagall firewall repairs, collateralized debt obligation and derivative regulation, leverage restrictions. But this adds one thing that we can do that will be felt immediately in homes all across this country, and that is to take people out of the terrible quicksand they get pitched into when they make a mistake in their payment, when they're a little bit late, and the tricks and the traps of the credit card industry pitch them into 30% plus interest rates. That would, frankly, have been a matter to bring to the authorities in a solicitation prior to 1978, but are now legal because of this loophole. And we are now a bipartisan amendment, and I want to thank Senators Cochran, Merkley, Durbin, Sanders, Levin, Burris, Franken, Brown of Ohio, Menendez, Leahy, Webb, Casey, Wyden, and Reed for co-sponsoring. And I will turn now to Bernie Sanders.
Let me thank Senator Whitehouse for raising this important issue. We hear a lot in this legislation, appropriately so, about the need for consumer protection. But if you go out to ordinary people all over this country and you say, what's the consumer issue on your mind? You know what they're going to tell you? They're going to tell you that they're sick and tired of being ripped off by banks that they helped bailed out and are now forcing them to pay 25, 30, 35% interest rates on their credit cards. I get calls every week in the state of Vermont from people who pay their bills on time and then wake up one day and say, oh, my interest rates were 15%, now they're 30%. Why? How did that happen? As Senator Whitehouse indicated, throughout history, throughout civilized history, the greatest philosophers and writers and every major religion has condemned usury. It is immoral to say to somebody in desperate financial need, we're going to squeeze you. We're going to take money you don't have through high interest rates. We've got to deal with it. I introduced legislation that would approach this problem from another way. What Senator Whitehouse is doing is basically saying, let's go back to the time when states like Vermont established usury rates and nobody in the state could be forced to pay more than that. That is exactly a good approach. It's a wonderful approach. So I think on behalf of millions of consumers and people who are disgusted with having to pay 25 or 30% interest rates. And by the way, they're paying these interest rates when they go to the grocery store to buy food they need or fill up their gas tanks in order to get to work. This is not luxury purchasing. So this is an enormously important legislation, one of the more important issues that we have got to address in this bill, and I'll do everything I can to see that it's passed. Thanks.
Thank you, Bernie. This is the first press conference I've ever done when somebody's mentioned Hammurabi, so thank you, Sheldon, for that. I appreciate that. It's an Italian guy, right? Thank you. And the importance of this amendment, I think, can't be understated, and there can't be overstated in terms of what Senator Whitehouse said and what Senator Sanders said. That the thing that bothers people the most is that they are paying extraordinarily high interest rates. Usurious interest rates is what we used to call them, and there seems to be no rhyme or reason to or limits to what banks can charge for credit cards. And it is historical. It goes back. The Bible in Exodus 22. Verse 25 said, "If thou shalt lend money to any of the people that is poor by thee, thou shalt not be to him as a usurer, neither shalt thou lay upon him usury." From our nation's founding until about 30 years ago, it was the job of the states to protect their citizens from usury. Most states did it. Most states kept credit card companies and other lenders from overcharging their customers. Most states kept these lending institutions from practicing usurious interest rates. Then in the 1978 Marquette Bank decision, as Senator Whitehouse mentioned, probably the most harmful Supreme Court decision that most Americans have never heard of. Big national banks are free to pick and choose a state. I mean, this decision of 30 years ago launched a race to the bottom in states to attract more business. We know what what large national banks did then, without restraint, without second thought. These national banks and credit cards now can subject consumers in any state, in my state of Ohio, Rhode Island, Vermont, any state, even if that state has strong usury laws, to unchecked and unwarranted and unwanted interest rate hikes. The Ohio legislature set the maximum legal interest rate on loans under $100,000, a maximum of 8%. Because of this court decision, the people of Ohio, in the legislature in Ohio, have no role to play in protecting their citizens. They're now often charged 2 and 3 times that rate. The Ohio legislature is powerless to do anything about it. Ohio consumers are then subject to these outrageous prices, and Ohio businesses, from community banks to retailers, face a clear competitive disadvantage. If we care about states' rights, if we care about sovereignty, if we care about protecting our consumers, the White House amendment is so very, very important. It's pretty clear what it would do. It's pretty simple what it would do. It's a lot simpler than most of the issues, as Senator Whitehouse said. This is a lot simpler than most of the issues that we've been debating and discussing on the floor. It would simply give states the power to protect their citizens from outrageous interest rates and fees. What can be wrong with that?